When you think about protection, store of value, and safety in the market, you think of gold, right? Now, let me challenge you. What if I told you that in many cycles, silver not only tracks gold, but can deliver more strategic and sometimes smarter moves? Maybe the mistake isn't ignoring silver. Maybe it's underestimating it. Howdy guys, I'm Chad, and I'm your host here at Zero Markets. And my main goal is to bring you insights from our experts to help you become more critical and strategic when it comes to the financial market. All right, let's get into it. For decades, gold has been treated as the absolute gold standard or benchmark for wealth protection. But seasoned investors know that the market is rarely that simple. Silver plays a much more complex and potentially more compelling role than most people realize. Today, we're going beyond the common narrative. We're going to break down silver's real function within a portfolio and how it positions itself relative to gold, and why the current environment makes this metal impossible to ignore. And stay with me until the end, because there is a structural detail that could change the way you see this asset. There is something very unique about silver that gold does not have. It lives in two worlds at the same time. While gold is primarily a monetary and reserve asset, silver carries a hybrid nature. It's a store of value, but it's also an essential industrial input, and that changes the game entirely. Today, more than half of annual silver demand comes from industry. Solar panels, batteries, LED lighting, touchscreens, telecommunications, water purification systems. Silver has become one of the highest electrical conductivities on the planet. It reacts to light, it can be shaped into microscopic wires. Most importantly, many of these applications use such small quantities that even when the prices rise, substitution simply isn't cost effective. Now think about this. We're in the middle of a structural expansion of global solar energy. The energy transition isn't a short-term cycle. It's a decades-long transformation, and the solar industry already represents a growing share of global silver consumption. At the same time, roughly 70% of global silver production doesn't come from primary silver mine. It's a byproduct of copper, zinc, lead, and gold mining. That means supply doesn't respond directly to rising silver prices. You see, if copper mining slows down, for example, silver output can decline even when the demand is strong. The result, the global silver market has posted consecutive deficits in recent years. And now comes the inevitable comparison. Gold depends largely on investors, central banks, and jewelry demand. Silver, on the other hand, is heavily tied to industrial activities, and that makes silver responsive not only to investor sentiment, but also to the broader economic cycle. It amplifies moves, it's less liquid, it's more volatile. And here's a data point that few investors analyze deeply: the gold to silver ratio. Now, historically, it averages around 68. Today, it's close to 61. That suggests that on a relative basis, silver appears more expensive compared to gold than its historical average. But expensive doesn't always mean overvalued. Sometimes it just means structural repricing. And this is where experienced investors must separate noise from fundamentals. The real question isn't whether silver replaces gold, because it doesn't. It complements it. Gold primarily protects against monetary instability. Silver protects against monetary instability while also capturing industrial growth. That means silver tends to perform best in hybrid environments: falling real interest rates, a weaker dollar, persistent inflation, and at the same time, economic or technological expansion. But here's the key point. Precisely because it's a smaller, more volatile market, silver requires strategic positioning. Recent speculative moves have shown it can rally sharply and give back gains just as quickly. The upside potential is real, but the path is rarely smooth. Investors who understand this don't enter looking for quick moves. They enter understanding its function within the portfolio, whether through physical metal, ETFs like the iShares Silver Trust, futures contracts, or mining stocks. Each vehicle carries specific risks related to liquidity, to leverage, and to tracking error. The decision is not emotional, it's structural. Not everything that shines for investors is gold. Sometimes it's silver. Silver is far from being a second option, guys. It's an asset with its own dynamics. It's influenced by both industrial fundamentals and macroeconomic forces. And that makes it particularly compelling in this moment of global transformation. The question is, are you looking at silver as a secondary metal or as a strategic component within a changing global landscape? If this video expanded your perspective on silver's role in the financial markets, drop a comment below. Would you include silver in your strategy today? And if you want analysis that goes beyond the obvious and helps you think like a global strategic investor, follow Zero Markets. We don't follow narratives, we understand structure. See you in the next video.